All right, you're looking at the price of Twitter, and I labeled out in one of the videos, or a few of the videos that I did, is that I feel that this market is frothy as of this moment, and there are just many red flags that I've noticed, and I've done a few videos on this. And let's just look at Twitter. I mean, I did some videos saying that, yeah, it doesn't make sense why Twitter is this high. And if you want to look at red flags, I look at red flags constantly. I just try to figure out, okay, what is what could potentially go wrong when it comes to a stock, an asset, a commodity. I did not understand this when I was trading silver a few years back. I mean, I got out of selling the AGQ, but then I got back to the miners, and that's where I got burned for the short term. I do believe that they're going to create a lot of inflation, and my mistake will eventually be taken care of. But going forward, I don't want to make the same mistake, and what I do is try to analyze these red flags. And let's just look at a simple stock like Twitter. So you see average volume, I mean, you could say it's around somewhere between seven and a half, not seven and a half, but you could say it's roughly like 5 million up to like Christmas, around there. And then you just see a huge volume spike here. Some buys here in the green, and then you see some selling. But then from a red flag perspective, the volume over here reached roughly, I don't know, 17.5 million, or what was it here? Yeah, 17.8 million as of the day after Christmas, which was yesterday, right? So the thing is that you see a huge volume spike, and then what happens today? You see the shortest downgrade ever. I'll show you that right now. Let's just read this downgrade. The bottom line, we expect this to be among the shortest downgrade note you've ever read, as nothing fundamentally has changed since our neutral initiation December 11th, except that shares have risen 40%. When we launched on Twitter 15 days ago, we laid out pros and cons and stated that Twitter was worth $46 a share. Since that time, on the back of virtually no new news, the stock has risen in value 40%. Since the IPO open on 11/7, Twitter shares are up 62%. We must continue to believe that Twitter as a company has a bright future and many opportunities ahead. However, as a stock, we believe nothing has changed over the last 15 days to justify the rise in valuation. Therefore, we are reducing our rating to underperform from neutral and maintaining our estimates and $46 price target. Macri expects that other analysts will also be downgrading the stock very shortly. So there you go. You get a downgrade, and as of today, Friday, the high was 70, and then the downgrade came shortly after, I believe. And it's like 67.40 as of right now. It's like 11 Central. So this is what happens when you. This is why I talk about suspicious and unusual behavior. And when you look at it, high volume spike, right? High volume spike, in my eyes, that's a red flag. And I'll show you something that I missed 2 years ago, but now I understand what I did wrong 2 years ago when it comes to silver. So when you go to silver, by the way, this is at stockcharts.com, and the last chart was at freestockcharts.com. But now if you want to look at what happened when silver was $50 an ounce in March of that year, March of 2011, you see that a huge volume spike, and it's buying pressure, right? So when you see a huge volume spike, it doesn't mean that the asset or stock is going to go down, but the probability goes up, right? And then the second thing I want to mention is what I'm trying to do now in trading, investing, and all that. Just look for myself. I'm not telling you what to do. I'm just looking at unusual patterns in markets and even studying emotions. And this is what I'm trying to come out at in the long run, to try to not make the same mistakes I made in the future. Even though, once again, I believe that silver is going to go much, much higher in the long run. And I just want to say that, once again, this is not investing advice. Talk to your financial advisor if you're going to do any investing on your own. Or B, if you're a sophisticated investor, always do your due diligence. And remember that these markets are whacked out. And speaking of whacked out markets, I mean, if you look at a stock like Twitter, I mean, the way that it's gone up, that's a red flag in my opinion, which I've stated before. and just see all this easy money chasing all these yields, and I don't know, it just feels that the market seems a bit too frothy. And another red flag that I talked about is Mike's status, a pretty damn good track record, even though I don't agree with his views. I've listened to his videos. I don't agree with his views whatsoever. His track record is pretty damn good, like I said. And he told his clients he's getting out of the market in December 2013, or that's what he's told his clients. So that's something that I'm paying attention to. Whether or not the market goes down, we will see whether he's right again. But anyways, thanks for listening to me, guys, and I'll talk to you another time.